Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Market rally in overdrive. Well, even though technically the Santa Claus rally doesn't kick in until Friday, the first of the final 5 trading days of the year, the stock market rally that began at the end of October has been nothing short of epic. Now, most investors expected the Fed to push back a bit at its most recent meeting against a market that had experienced a substantial rise after the early November Fed meeting. Instead, the Fed last week was a green light for investors to keep buying stocks like it was 1999. After cautioning for months that further tightening of monetary policy could be warranted, meaning higher interest rates, the Fed now sees the potential for multiple rate cuts next year. You heard that right, rate cuts. Now, given that higher rates had been the cause of much of the market turbulence during the past 2 years, this was a clear signal to investors that it's now time to buy. Or is it? Riding the market rally higher is one thing, but going all in after a quick 15% jump in stocks could be asking for trouble. Investors should be careful what they wish for. Lower interest rates may end up coming at the expense of significantly lower economic growth, which could negatively impact earnings and stock prices. So stay invested, but consider rebalancing portfolios by trimming some gains here. For this week's featured insight, beat inflation by owning it. Well, inflation is moderating, which I've explained previously simply means that prices are rising at a slower rate, not coming back down. As I just discussed, Fed Chairman Jerome Powell and the rest of the Federal Reserve Board clearly shocked Wall Street into believing that more monetary easing, that is, money printing, could be on the table in 2024. Now, that would likely eliminate the idea of the Fed hitting its 2% inflation target. So how do you combat inflation? Well, according to Nobel Prize-winning economist Milton Friedman, you own it. Stocks are, in fact, a pretty good inflation hedge, so they've been rallying. Now, commodity prices have been more volatile of late, but some exposure there makes sense as well. One of the best options, however, currently looks like foreign equities. They're now at 50-year lows relative to U.S. stocks on a relative valuation basis. Everyone dislikes the asset class, and it's broadly underowned, and international stocks tend to be one of the best inflation hedges out there. So make sure you own some. Looking ahead, Happy New Year. Well, it might not have looked like it just 2 short months ago, but investors turned out to have a pretty good year in 2023. The future is always uncertain, but 2024 brings with it the potential and promise of hope for an even brighter and more prosperous year ahead. Regardless of what's in store for the markets, next year should certainly bring plenty of drama given the upcoming election season, especially given the dynamics of this particular presidential race. For now, though, we wish everyone a very Merry Christmas season and a Happy New Year. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.